XBAL. This is the iShares Core Balanced ETF portfolio. DIY investors have been using this fund since 2007 to leave their advisors. Almost $2.5 billion of money are using this strategy. Over 200,000 shares trade each day, and this ETF has a very low bid-ask spread at 0.04%. The MER of this ETF is 0.2%. This is about a tenth of the cost of using the average advisor. This ETF only has 8 holdings, but this is a fund-to-fund ETF, so there's hundreds of securities in this ETF. Bonds have been volatile lately, so there's a beta of 1.16. This is a very passive ETF at a 7% turnover rate. This ETF has a trailing 12-month yield of 2.63%. And you're going to get these distributions paid quarterly. The PE is 17.91, the price to book is 2.66, price to sales is 2.11, price to cash flow is 11.92, and the 10-year Sharpe ratio is 0.74. So to build the equity portion of XBAL, it uses 3% in emerging markets, 15% in international, 27% in American equities, and 15% in Canada. So we're going to give XBAL a little facelift without a bias with the MGN portfolio with VEE for 3%, ZDM at 15%, VFV at 27%, and ZLB at 15%. And we're also going to test out InvestScan. Slightly different allocations, but still 60% equities. So we're going to put 8% in VEE, 10% in ZDM, 12% in FHQ, 18% in VFV, and 12% in ZLB. For the 40% of XBAL's fixed income portfolio, it uses 4% US corporate bonds, 4% US government bonds, 6% Canadian corporate bonds, and 26% in an aggregate bond. This just spreads your money throughout the entire Canadian bond universe. For the MGN facelift, we're going to use the same allocations, so 4% in ZIC, 4% in GOVT. GOVT is a US listed ETF, but there's really no Canadian comparable with 10 years history. We're going to put 6% in ZCM and 26% in ZAG. For InvestScan, you have a little more control over your fixed income, so we're going to put 9% in ZIC. So we're going to put 9% in ZIC, 10% in ZCM, 7% in PFL. We're going to add some commodities in the mix and put 10% in gold. We're going to use CGL.C, and we're going to pair that gold ETF with a money market product for those black swan events and put 4% in PSA. So how do you figure out your retirement income? You need software. A 65-year-old living to 95 using a 2.1% inflation, just like Financial Planning Canada, you should be able to withdraw about $4,807.48 adjusted for inflation. You can do yourself a favor and just withdraw everything in January, and this is $57,689.75. Including your CPP and OAS, this is an after-tax income in Ontario of about $63,222.27. Testing out that withdrawal stream over the past 10 years, XBAL was still above water with just over $1 million. Not having a bias with your portfolio, giving it an MGN facelift, you still had $1.17 million. And trusting a robot to do the math for you, you have $1.5 million with the InvestScan portfolio. This is almost a $500,000 difference in 10 years, and a pretty good reason why I don't recommend buying asset allocation funds. XBAL had the worst returns, the highest standard deviation, the worst best year, the worst year, the highest max drawdown, and the worst Sharpe ratio. You can't tell me XBAL is a good product.